Today, stocks came crashing down. However, are they setting up for another leg lower? As you look at that chart right there of the S&P 500, can you spot the chart pattern that is setting up right in front of our faces? Now, we're coming over to look at how the Nifty fared across the board. The Dow was down 797 points. The Nasdaq was down 536 points. S&P 500 down 113 points, with the Russell 2000 being down 6.82. Now, when we look at advancing the issues versus declining, we had 77.1% of issues advance on the day. So overwhelmingly, we can see the bears were in control. Then as we come over to look at the sectors across the board, every single sector was in the red, and the one leading the charge was technology. Technology down 2.69. Now, if we look over here at the heat map real quick, and this is something we talk about all the time on the live stream, but I always want to pay attention to what are the Mag 7 stocks doing. We can see Nvidia down 3.58%. Apple was barely down for the day. Tesla down 6.64%. And the only Mag 7 stock that I saw in the green today was Meta, up 0.16. Now, we've been talking about this time and time again as well. The Fear and Greed Index, we've been staying between extreme fear and over into fear territory. Once again, we are back over into extreme fear. Then as we come over and look at the most recent investor sentiment survey, once again, we see the bullishness drop down. The prior reading was 38%. Now it is at 31.6. But look over there at the bearish side. It went from 36.3, jumping all the way up to 49.1. So majority of market participants are starting to say, uh-oh, we may be in trouble. And even some people thinking the markets may be rigged. We come over and look at Michael Burry. He deregisters his hedge fund, and he says he's on to much better things. Michael Burry, in the last filings, he was short, Palantir, Oracle, I believe, and now we see the market starting to collapse. So I wonder if the investors in this firm lost some money out of that. If we look at Palantir real quick, Palantir is just about to break the validation point for an ABC pattern on the way down. We can see that price completion would be about 156.29. Now, something else that I noticed today, we want to pay very close attention. Look at the volatility index. The VIX was up 14.4%. Now, at some portion of the day, I did see the VIX was actually up 20%, but then it came off just a bit. And there's a rule behind this. Whenever the VIX is up or down more than 10%, that implies that the next 1 to 2 days is actually going to have an adverse reaction. So since the markets were down today, expect that either Friday or Monday is likely going to be an update in the stock market. Now, if we come over and look at the dollar index real quick, dollar index, a bearish day. We have a little bit of a wick on the bottom of this candle, but then we come over and look at the precious metal gold. Early on, we seen gold on the way up, basically coming right towards this structure breakdown point. And if we actually look out here on the 4-hour chart, you can see right here where we spiked above the zone, and that zone came from the candle wick right over to the candle body over here back in October 25th or so. Now the question is, can we continue to push lower? Notice the MACD indicator is crossed to the downside, and we'll see if we start to get a momentum push a little bit lower. Now, with technology stocks starting to crater a bit, let's come over and take a look at Nvidia. As Nvidia was down more than 3.5%, we see Nvidia does have a little bit of a wick. So is this low from last Friday going to be able to hold, or are we about to flush and go lower? Nvidia, like a lot of the markets, we can see we have this potential for A to B, B to C, and we project down here for D, because at this point in time, this is appearing to be a lower high in the market, and it's still yet to be seen if we're going to produce a lower low out here. Now, jumping over and taking a look at the SPY, hopefully now you can start to see that pattern starting to unform. We have a potential lower high. We have the A to B leg, the B to C leg, and let's go ahead and project out for D. Now, to draw this out, you can come right over there, grab your Fibonacci extension tool, measure from the swing high down to the swing low, and then pull it right back up here towards the swing high. Now, the price completion on that would be down here about 656.39. Well, if we come over real quick and we look at some of the gamma exposure levels that we were looking at yesterday, one of the key levels that we do have below us would be here right around 660 or so. And we were talking about this yesterday. If we cannot get back above 685 and hold it, watch out. We're going to go down to 680, and below that, we are likely going to see lower prices in the market. So now as we come over and look at the updated GEX levels right now, we can see one of the key levels that we do want to focus on was this put support level right down here, right around 670 or so. And if we look, what was the low out here today? Low today was right there at 670, but I got to warn you guys, if we start breaking that 670 price point, we can see another cascade effect and then watch the market potentially run all the way down, challenge the lows from last Friday. Keep in mind, that gap has now been filled. And a lot of traders out there believe that since we bounced off the 50-period moving average, that was all that was going to be needed, and we were going to be making new all-time highs. However, we always want to pay attention to what is the market's telling us. We come over and look over here at the 4-hour chart. We can see as the market's price was coming up, the MACD indicator just was not showing that much strength. And now on the 4-hour chart, we have a bearish cross out there. On the 30-minute time frame, the MACD indicator is down below the zero line and could be in the early stages of trying to firm up. Now, one of the areas I would want to watch, which were already there in after hours, would be right here, right around 673.69. Keep in mind, today we did gap lower, so will we make an attempt to run back up there and fill the gap, since we've already come down and filled the gap from Monday? Now, in the event that tomorrow we start breaking below the lows of today, I want to turn my attention right near value area high, kind of this minus development area right down here. And I'm going to go ahead and draw this out for you real quick. That's going to be anywhere from 668 down here to about 667. Anything below that price point, I really want to focus down there at the 660 price point, where I already showed you previously we had a lot of gamma exposure. I want to let everybody know right now, Tip Profit Trader, 40% off all their evaluation accounts. Best yet, zero activation fee. To take advantage of this offer, use the link in the description box down below. Use promo code epitome at checkout. Now, we come over and look at the futures markets real quick. Start off looking at the 4-hour chart. One of the things we were talking about in pre-market was, could we get this 38% retracement? Well, we violated that level. We actually made it all the way down to 61.8 level. Now, thankfully, we are able to fill the gap that was left behind from Sunday night. Now the question is, are we going to go ahead and turn back up? Because if the market does find a bottom around this area, that could actually be setting up a larger ABC pattern, and that price completion would be somewhere up here about 69.89. However, if we start violating the 78.6 Fibonacci retracement level, let me go ahead and redraw that out real quick, which comes in about 67.08. Then I believe we're going to go all the way down, challenge the lows from last Friday, and then really start working on some lower prices. One such price would be kind of this little support zone right down here, candle wick right here to the candle body. And if we look right over here on the composite profile, it comes right within a minus development area on the profile. Now that zone will be anywhere from 65.91 and a half down here to about 65.72.50. Now we come over and look at the QQQs real quick. What do we got going on? Well, we were able to come back and fill the gap. On the daily chart, the MACD indicator still looks horrible at this point in time. And it's looking more and more like we're going to go ahead and run the wick from last Friday, which is something I talked about in either Sunday or Monday's video. And then we come over and start looking at the 4-hour chart. 4-hour chart, MACD indicator still looks bearish. Notice the low of the MACD indicator is actually lower than where we saw it during the lows of last Friday, which is also an indication that, watch out, we could be building steam to go substantially lower. On the 30-minute volume profile chart, we kind of have a B as in boy shaped profile. So tomorrow, if we start getting above value area high, 611.29, I want to focus right up here towards about 615.36. Anything above that, we'll look at gap resistance, 618, and then all the way up here for the gap to be filled at 620.97. However, in the event that we start breaking below the lows of today, then I want to turn my attentions right back down near the lows of last Friday. So let's go ahead and map that out. Candle body right down here to the candle wick, somewhere in the ballpark of 599.73 to about 598.82. Now, when we come over real quick and we take a look at the GEX levels, notice we have a lot of GEX exposure right down here, and that's going to come in at the price point of 600. Now, if we look at where 600 is, where does that correlate? Well, that correlates right within that zone in which we drew out. But I want to caution you guys on this. One, the GEX level can act as a magnet, and two, it can act as a rejection point. But what about scenario number 3? Scenario number 3 would be if we start breaking that 600 level, notice where the next high GEX level is. That would be right around the 590 strike price. And I'm kind of curious, if we look right back over here on the daily time frame, where does 590 correlate on the price chart? We can see that would bring us almost right back down near the lows of that nasty down candle we had, which also occurred on a Friday. Now, I'm not saying this whole entire move is going to take place over one day, but as conditions continue to deteriorate, like we see right here, the subprime auto delinquency is at the worst in over 30 years. Let that sink in for a little bit. It's worse than what we saw during the pandemic. It's worse the great financial crisis. And again, all of this can just continue to build. And that could cause the stock market to go substantially lower than what everybody's pricing in, because right now, everybody has been thinking that AI is going to save the day and the markets is only going to continue to make new all-time highs. Now, if you guys like to learn about Take Profit Traders hedging rule, then you want to make sure to watch this next video right here.